I'm going to kick off our little session today and just want to thank you all for being here. For those of you who don't know me, my name is Tarek Mogani, and I'm the founder and group CEO of Affinity. We are a digital banking platform built in Ghana for Africa. After getting the first license grant of its kind in 15 years and launching our first product at the end of 2024, we've banked 140,000 customers, most of whom were acquired organically and did not have bank accounts until we turned up. Thank you. It's so weird. It's like having a whole bunch of family in this room, investors, board members, people who've been by my side for 10 plus years. It's kind of weird. It's like a professional wedding. Anyway, of course, this is wonderful. Everyone hears the story and claps, and they have been for the last year and a half. But unfortunately, this was not an overnight success, as I'm sure a couple people in this room will testify. In 2024, I was given the best gift of my professional career, an opportunity to spend a semester at Yale, to contribute to academic life, and to benefit from all the resources within the university community. I went in after spending close to a decade launching Affinity. After several lectures, private dinners, one-on-ones with ex-heads of state, governors of some of the largest central bank, I had the privilege of spending a month with the former governor of the Central Bank of India, and he kind of navigated the country out of COVID, an incredible man. Senior leaders, founders of the biggest AI companies from OpenAI, Google DeepMind, as well as investors, donors, and multilaterals. I actually had a very rude awakening after spending so much time on the continent. We are lagging significantly, and we do not have a seat at the table. I did not leave the fellowship depressed, though. Instead, I left with a sense of urgency and increased ambition to be bolder, to be collaborative, and to be a better leader. I kept asking myself, what will it take for us to scale efficiently and effectively, to solve for financial inclusion and create value for all our stakeholders? The truth is, the private sector can leapfrog all at once, but it will not be enough to solve the fundamental hurdles our economies face. We have the resources, but do we have the ambition and the will? When will we organize ourselves to increase our chances to win? The answer has to be now. That's where the idea of this launch took place. We need to collaborate with stakeholders who are responsible for our continent and its future, to work together and fundamentally change the outlook of our countries for the better, because enough is enough. We are focusing on financial inclusion because it sits at the center of everything. Without it, there's no access to education. There's no access to healthcare, no access to clean energy. Financial health underpins every freedom that communities might claim. The report we launched this morning is the first in a series designed with one purpose: to give every ecosystem player clarity on what it will take to succeed. It is a wake-up call. We have convened everyone here because you have a stake in this work and you have a role to play. Whether you're an innovator, an investor, a policymaker, a donor, a storyteller, your contribution is essential to solving for this. This afternoon, we will have a short panel session with important change makers contributing with your thoughts ahead of questions. But before we get into that, this report would not have been possible without the collaboration of Yale's International Leadership Center and the Mo Ibrahim Foundation. So I'd like to welcome a few words from Professor Emma Skye from Yale and Nathalie Delapin, the CEO of the Mo Ibrahim Foundation. Emma, why don't we kick off with you?
Tarek, thank you very much. So, Yale's International Leadership Center, our mission is to develop and support innovative, adaptive, and effective leaders to address the most acute and complex challenges facing the world: climate, peace, security. And internationalism is in our DNA. So we run the Yale World Fellows, the Yale Peace Fellows, and the Yale Climate Fellows. And I think of our center as a balcony where leaders can come and step back from the noise and gain perspective. And also as a bridge, connecting global leaders to Yale, Yale to the world's hardest problems, and leaders to one another. And what I've come to believe is that underneath every challenge of this scale really is a crisis of leadership. And the world needs leaders who can navigate complexity, bridge divides, and turn ideas into change. And finding those people and connecting them is what we do. And what a network we have. So roughly a quarter of our fellows are African, and over half our applicants are African. The talent is there. The work is to find it, uplift it, and give it room. Which brings me to two people in this room. Tarek Mougani, a Yale World Fellow. He left London, went home to Accra, and founded Affinity, a digital bank built for the people the system forgot. Nearly 65% of Affinity's customers were previously unbanked. Over 60% are women in the informal sector. For them, financial inclusion isn't a buzzword, it's a revolution. Tokumbo Ishmael, Yale World Fellow, a Nigerian trailblazer in impact investing, who moves money with mission, using capital to scale solutions from a new generation of African entrepreneurs. Jonathan, not a Yale World Fellow, yet. We scout talent everywhere. Rumor has it you're brilliant, so I'm glad you're with us today. And so this is what our center does. We convene leaders from different backgrounds, different perspectives in the same room to focus on a specific challenge. And I should say BB over there is also a Yale World Fellow. So by the middle of this century, Africa will be home to nearly a quarter of the world's population. And that fact alone should reorient how the world thinks about finance, infrastructure, and opportunity. Africa is not a problem to be managed. It is the demographic, economic, and entrepreneurial frontier of this century. And how the continent prospers will shape how we all prosper. Africa's got talent. Africa's got innovators. Africa's got the world's most advanced mobile money infrastructure, carrying 3/4 of global transaction volume across more than 1 billion accounts. It has built agent networks that reach places banks never went, proving financial services can scale without traditional branches. And yet, as this report sets out, with admirable clarity, cash still wins. Now, nothing about Africa's future is preordained. The components of a less cash-dependent continent already exist. The task is aligning incentives, regulations, and investments so they work together. And that's a leadership challenge as much as a technical one. So I'm very proud that the Yale International Leadership Center is part of this collaboration. And I look forward to this being the first of many outputs we produce together. So thank you.
Thank you. Natalie.
Hello. Does it work? Yeah. Well, thank you very much for having us. I mean, the Mo Ibrahim Foundation is extremely proud and happy to be there because it speaks a lot to the DNA of the foundation, to the DNA of its founder, Mo Ibrahim, whom you may know founded the first mobile communication system, jumping from nothing to mobile, where some of his interlocutors were saying, why mobile immediately in Africa? They still don't have fixed telephone. So it's going too quickly. And there he highlighted what is something in which we strongly believed, which is the ability for Africa to leapfrog, probably more than any region in the world, and probably also given to its youth. And the second point is it speaks to what we are working on at the Mo Ibrahim Foundation, which is public governance, and also making the point that Africa must be seen thanks to facts and figures. We need to articulate Africa's point when it comes to global challenges. So in the very last two reports that we did, one of them, which was discussed in Marrakesh last year, Financing the Africa We Want. The midpoint, The Africa We Want, as you know, is the title of African Union's Agenda 2063. I'm not doing the marketing. And we made the point that the end of aid, because we are at the end of aid, is not the end of the world for Africa, because Africa has indeed the potential to finance itself. So as you said, Tarek, the money is there. We just need to work on the mobilization of domestic resources. And in this case, I'm not going to list all these domestic resources, but they are huge. And evidently, digitalization will help and will be a key factor to accelerate and speed up this mobilization of domestic resources. The second report we've just published at the time of the Africa Forward Summit was called Africa Forward Mobility and Connectivity. There will be no mobilization of these domestic resources and no continental integration without working on mobility and connectivity of the persons, of the goods and the services. And here again, digital money will be absolutely key. So what we said in both reports is, once again, the question is not the money, the resources, it's the processes. We need to work on the processes because this is the only way to unlock these resources. So once again, what's been done by Affinity is exactly where the solution is. And it's showing that we need to step away from just saying what the problem is and what should be done to solve it, but just solving it and showing the yes, we can. And this is once again exactly what you are doing. I would say maybe two last point. I think what's important is to work on the narrative, not only the process, but also the narrative. And to make the point that, yes, it's difficult, but yes, we can. And there's also an interest in doing that. It's an opportunity, but it's an interest. So I think if we can join forces all together to do that, it will be key. I would add one small point when it comes to digital money, which is security. Because it's true, and it has been true through history. People want to keep cash because they think this is security. So how to address this total change of narrative by explaining that, on the contrary, digital is security. And another small caveat is access to energy. There won't be a full implementation of digital money without access to energy for all on the continent. And as we all know, there's still half the people who don't have access to energy. And this is only the data about the people. It's not the data about infrastructures or companies or whatever. So this means, having said that, as you all said, we need to build coalitions. Of course, it's the financial systems, it's the leaders, as you say, but I would say it's also the private sector. It's the people. The people need to, understand that it's for the best of their interest to access this system and to use it. And setting up best practices and best stories, it's probably the best way to do it. And you are just setting the best story ever on that continent. So well done, and thank you to be here.
Great. So what are we doing? We're starting a coalition at the end of this day. Great. So I'm going to kick off with just a few questions from the incredible panelists that we have here. We actually had a third. The head of innovation from Bank of Ghana was supposed to arrive this morning, but unfortunately she got to the airport and she was not allowed on the flight. And I know. I did interview her this morning, though, asked her a couple of questions, so I'll be reading them out for everyone. So I want to introduce the two panelists that we have, who obviously, like we've already kind of mentioned, Tokunbo Ishmael, who's the founder of Alethea Capital, and Jonathan, who is a professor at SOAS as well, too. Tokunbo, I'm going to kick off with you, if that's okay. Hope you don't mind calling you the veteran in the African ecosystem, given you're in your 20th year as your co-founder of Alethea Capital. That deserves a round of applause, everyone, by the way. Survive 20 years running a fund, especially in our part of the world, is not easy. As an investor, you have seen a lot of innovators pitch companies replicating ideas from the global north or building solutions specific to the African continent. When it comes to financial inclusion, what has worked and what hasn't?
Thank you. Is this working? What has worked? Well, first of all, thank you for putting this on, and it's a much needed discussion in the heart of London where there's a lot of money. So we can learn a lot from this great center of money. Second of all, perhaps I'll accept that label of veteran if you define it as someone who has many scars, battle scars, many wounds, mistakes that we've learned from, but remains optimistic. So I'll take that if that's the definition of veteran. What has worked? Listen, we made our first fintech investment in 2010. It was a very long time ago. And there were many naysayers. Why do you need this? Why don't you? And we spent a lot of time building the road for many fintechs that have come since. We worked with the central bank on the first mobile money license, worked with the central bank on rejigging the microfinance licenses to reflect what might be coming through digital infrastructure. And what has worked is that the financial inclusion that came with that digital infrastructure was access. So we were able to take access to money to where the people lived and worked. So really providing finance around behavior and around the everyday activities that people engage in. And so rather than telling people to go to banks, we were able to say, you know what, we need to take the banking platforms to the people. And that largely worked. And we've seen that largely worked because I remember when Paga, one of our first investments, when it was starting out, it barely had 10 customers. Today, it has tens of millions of customers. It's transacting on billions of dollars that are passing through the platform on an annual basis. And it's, yeah, I was about to say, thank you, you're keeping up. It's the only PayPal partner in Nigeria, so enabling seamless transaction between PayPal accounts internationally and what have you. So we've provided the rails, and there are many other companies that have come along since, Paystack, Flutterwave, and a whole host of companies. Affinity is also a fintech, microfinance, but you drove that with technology. So we provided the access. But as your report says, and as the figures show, when people get that money, they cash it out. And so what hasn't worked is thinking that access means inclusion. Access just facilitated the money to flow, but due to a variety of reasons, including trust, like you mentioned earlier, people receive their money, they cash out, including cost of carry, cost of holding. People receive their money, they cash out. Usefulness, until people can use the platforms to conduct their everyday, and it's shocking that we still don't have that now, where people, for example, the lack of interoperability means that you can't just move money between different wallets and conduct various transactions. So that hasn't worked. Access is not inclusion. It has facilitated the path towards inclusion, but when it's cheaper for people to use the digital rails over cash, when there's interoperability such that there's usefulness with the wallet that people have, because access is not just having a wallet, and when people are able to conduct not just the transfers or the remittances, but begin to plan their financial activities, whether it's whether it's inventory management, with the digital connected to the cash, whether it's ordering, whether it's, again, paying a supplier, the supply chain works without everybody having to be on the same provider. I remember when I first opened Alethea, we had to make sure that everybody had their bank accounts in the same bank where we banked in order for us to be able to pay their salaries. We've moved on from that, but fintech still seems to be in that era where, oh, you don't have an Affinity wallet, I can't really send you money. So we need to work a bit more on those areas. So what's worked is the access. What hasn't worked is the trust, the cost, and the interoperability and products.
So full-on value, basically, across all the work that you do. And just to be clear, with Affinity, you can send to other bank accounts and mobile money.
No, you can send to other...
Full interoperability.
You can send to other bank accounts, but the interoperability between wallets is still a bit shaky.
It's a bit better in Ghana, though, thankfully, but not enough as well, too. So Jonathan, I'm going to move on to you. You're a senior lecturer at SOAS. You examine how law shapes trade, regional integration in Africa. You also have extensive experience in the private sector and international development, having worked on donor-funded projects with small-scale women traders involved informal cross-border trading in the DRC. Why do you think cash still features heavily in the day-to-day lives of these communities?
Thanks, and thanks for inviting me, and thanks for having me here. And I was telling a few people here that I feel like I'm the odd person here. But I'm not.
You're not. No, you're a Now Generation Network member as well, too, through the Mo Ibrahim Foundation.
No, but an academic with all financial people here, it's a bit weird. But it's fine because it links to my experience before. Like before I rejoined SOAS, I was working in Eastern DRC, DR Congo, where I'm from, and I'm also from the Eastern DRC, so no comment. And I was working for an FCDO funded project, private sector development, and the project was in two angles. Elan, the angle I was working for, was working with the private sector, and then ESOR was working with policymakers. And in that project, I was working with women traders in Eastern DRC who do trade with suppliers in Rwanda, Uganda, Zambia, and Burundi. And our approach was a market system development approach, where we were looking at the issues or the challenges that our beneficiaries have, and then we were working on solutions with whoever or other stakeholders were. And one of the key issues, and so I worked as a consultant for 4 years in that project, and then I came back to London and I went back as a researcher because I thought the way that I organize themselves and the solutions that I've already found have to be known because they're not visible. Most of them work in the informal sector, and the reason why they're not known is because they're not registered as formal businesses, but that's because they don't see the value of doing that, because as soon as you are talking about the challenges that they have when you become formal, you have all these taxes that are not adjusted to your reality, so there's no point of joining. And we were doing capacity building and helping them with advocacy because they were facing so many challenges that we thought we have the resources to help them with them. One of the segments of our project was access to finance and financial inclusion. And then we realized we were trying to force them to go to microfinance and etc. to link them to the existing solutions. But then we realized that's the wrong way to go. The best way is to learn what they are doing already and then find out how to connect them or to connect the banks to their realities. And we realized that, like you said, cash is prevalent. And that's why I love your report, because the report is basically saying what we've been saying for a long time, which is cash is there, is reliable, is rational in the environment, because what they need cash for is quick transactions between them, and also there's a regional aspect where they need Congolese francs and dollars in order to go to Rwanda and change that into cash on the other side of the border, which for them, when digital, and I love that you mentioned that one of the key issues we had when we were trying to connect them was they don't have access to the digital solutions because sometimes they don't have electricity, and that they want to have cash because cash, whether you have your phone is charged or not, cash is there. It will never disappear. But also because they can trust the cash that they see. We did pilot projects where they were connected to the digital solutions, but as soon as there was one issue with one trader, the word will go around and say, no, that's not something we should go for. And also the costs, because they were saying when it's our solutions, they have the thing that really impressed me was they have something they call the village savings and loans associations, which really worked for them. I went to some of their meetings and I was impressed by the amount of cash that was going around and also how they kept the cash. Because as a lawyer, my first question was, how do you make sure that this doesn't get stolen? Like, this is your money. And they're like, yeah, we know how we work. Like, we have our secrets. We know how this works. And if someone steals the money, we know that it's one of the members who leaked the information. I was like, but it's still dangerous. But they didn't, because they trust and it works for them, and they only had one issue in 10 years, they thought, cash, we can see it, and we can touch it, and we know that we have it, and then we give the loan. So that's one of the things. The trust is a key thing, it's reliable. They can use it, it's quick, and it doesn't have, for example, some of them are starting to use M-Pesa or mobile Airtel money, etc. But sometimes they said, I will send the money, but I don't know when the money is going to arrive on the other side. Sometimes I don't get the text message that says the money has arrived, so why should I use it?
According to the World Bank, it's 40% of transactions are like that, mobile money.
Exactly. But then when we started, it became a bit more serious when the solutions that we were proposing, we said, during COVID, not all of them could travel with the money because individual traders would travel with the money. So they started putting the money together because they could not all cross. And then one person will try to cross with $12,000, $15,000, which is illegal according to the DRC legal system. So their money was confiscated. More than $30,000 were confiscated, and they only got the money back 10 months later. So we told them that's why you need a digital solution, because then you would not have to carry the cash. You just send the money. They said, yeah, but there's a cost, and also we don't know who's taking our money and where the money is going to land on the other side. But they started thinking about it, and the microfinance finally listened to us because we are funding some research to help them adjust their products and work on the trust with the traders. So they started doing the group loans, et cetera, But I went back, so that was we stopped the project in 2021, and I went back as a researcher in 2023 to see what progress had been made after COVID. And as the microfinance said, we're proud to say that we have 120 customers in Goma, and we have a bit less in Bukavu. And I say, yeah, but Goma is 7,000 members or in those associations, and Bukavu is 2,500, almost 3,000. How can you boast about having 120 out of 7,000? And we said something is missing, and that's, in my research, I realized the issue here is, while we were there as a project, funding the research and funding those transactions, they were there. They were happy to do it. And like you said, the incentive is key, because they saw the incentive in us giving the money. But once the project ended, they didn't see any incentive in continuing. So they just used the same product that we helped them develop, which didn't adjust to those women. They move really fast. And if you don't catch up with them, your product doesn't make any sense anymore. So we're saying, I'll say that as a researcher, you need to work better in catching up with the women, because your product doesn't, cash is still more relevant to them than your product is relevant. So this is something that I'm still doing research on. I'm not going back to Congo anytime soon to continue the research, but I have the data from 2023 to make it more visible, because that's something that is missing, is the research. And this is why this is very important, because the government, the policymakers won't fund this type of research, but they need the information that you're sharing. So this is why this is important, because they don't see the issue or the problem with cash. And even the traders themselves, they don't see why that's an obstacle, and it's not just a solution for them to use cash. And that's why maybe the last thing I would say is this type of report would, in Swahili or Lingala, etc., other languages would be very relevant to the people who can use it, not just policymakers, but also the traders themselves.
Thank you. We'll get it translated. I would make a film out of it. That'd be great. Exactly. Use AI. It's interesting, though, that you say that cash is used because it is safe, it's trustworthy, It's cross-border as well too. All the sort of things that we discuss, and also you don't need energy for it, given the fact that you don't need to charge a mobile phone to make it work, right? So all the things that we're trying to solve for. I asked Sharon, who unfortunately couldn't make it, like I mentioned, a question this morning. So I'm going to ask her the question like she's here, and I'm going to not change my voice, but answer the question in her tone. Sharon, as the head of innovation, you sit at the center of policy at the Bank of Ghana, a regulator that has a reputation for being innovative on the continent. From creating a regulatory sandbox in 2022 to virtual assets regulatory framework in 2026, only just got released. But has the focus been too much on digitizing payments and not enough on improving the underlying economics of financial services? She actually gave me that question to ask her, by the way. She's a firecracker. I'm sad she's not here. So I'm going to answer her own question, her own answer. I would argue that digitizing payments was never the end goal. It was the foundation. Before we can talk about digital credit, savings, insurance, investments, cross-border trade, or even emerging technologies such as tokenized assets, people and businesses need a trusted and interoperable way to move money digitally. Stuff that you guys have echoed. And I think it's not just interoperable within the country itself, it's cross-border as well too. I had a conversation with Natalie about PAPS earlier on. Over the last decade, Ghana has invested significantly in building that foundation through mobile money, interoperability, agent networks, merchandisation, simplified onboarding, and regulatory innovation. We have expanded access to formal financial services to millions of people. The Bank of Ghana has played a central role in this journey. During the COVID pandemic, measures such as merchant recategorization reduced onboarding barriers and enabled more small businesses to participate in the formal digital financial ecosystem. Through the regulatory sandbox, we provided a controlled environment for innovators to test solutions that address real market challenges, including cross-border payments and digital commerce. More recently, initiatives such as OpenDXGH, our digital banking work, and the virtual asset regulatory framework demonstrate a deliberate effort to prepare Ghana for the next generation of financial services. However, I agree that the next challenge is different. The question is no longer whether people can make a digital payment. The question is whether digital financial services improves people's financial lives. This is why the conversation is increasingly shifting from access to outcomes. We need to focus on affordability, financial health, responsible access to credit. Sharon's also the person responsible at the Bank of Ghana for organizing one of their biggest conferences that convenes about 5,000 people a year. It's called 3i. It's been happening for the last 3 years. And she moderated a panel where we talk about ethical lending, by the way. So I know that's something that's very, very, very important to her. Responsible access to credit, savings, investment opportunities, consumer protection, fraud prevention, and support for small businesses. We need to create an environment where digital payments are not merely a means of moving money, but a gateway to broader economic participation. This thinking is reflected in Ghana's evolving financial inclusion agenda, the emerging focus for the National Financial Inclusion Strategy 2026 to 2030, so the World Bank's running that with the Bank of Ghana, which he's involved in, is not only on access, but also on usage, quality, and financial well-being. In other words, financial inclusion should not be measured solely by the number of accounts or wallets opened, but by whether individuals and businesses are generally better off because they participate in the financial system. I think she deserves a round of applause, and for me reading all that out as well too. Oh, I know. I did try and practice, but I couldn't memorize it, not even my own bit. I'm going to ask a quick fire question then for the panelists, and then we'll wrap up with some Q&A if that's okay. So I'll start off with, let me start off with Jonathan, go in reverse order if that's, I'm so sorry. Yeah. Jonathan, what does the next generation of financial inclusion look like? That was also a question from Sharon, by the way. She helped me out a lot here.
She's not here. That's not fair. But I think it's just kind of linked to what I said earlier. The next generation should be something that goes to what the people already have, the solution that they have, and that's adjusted to what they have. Because, for example, M-Pesa and Airtel Money, MTN, etc., it works because it doesn't have, and I'm not, Affinity has an app, so sorry to say this, but good luck with that, because the DRC market is one of the most difficult. But if for USSD codes, so that works for them because it's those small phones that can last 3-4 days. The charge can last 3-4 days, and then that's easy to use. And they don't have that many issues when they use it, because the only big issue is when they don't receive a text message that confirms that they send the money. But that's because that adjusted to the realities of the informal sector and the informal and the traders and how they work and how quick then they need the transactions to be. So that's, for me, is why it worked. It's not perfect, but why it worked is because it adjusted to the realities that were there. I'm not saying that access to energy should not be a key priority, but before we get there, we need solutions that can work now and today. And in Eastern DRC, I'm not going to say everywhere in Africa, but in Eastern DRC, that would be the first thing. Something that can work for people who don't have access to energy yet, but that can actually help them. Because something we also work on with the microfinance was also credit scoring to make sure that we can use mobile money transactions for that. And it worked. Still not at the scale that we wanted, but it works. So that's, for me, that's the next generation. The next generation is actually seeing what the people are using and helping them understand how those solutions they have can be enhanced by digital money. That's maybe, for me, that's the first step.
Thank you. Tokumbo?
Yeah, I mean, I would say, obviously, it's not just about growing the number of wallets, but having economically useful wallets. So can a woman trader grow her business, manage her risk, build wealth? Can a smallholder farmer do the same? Can buyers and consumers have wallets that enable them to purchase, yes, but also build their wealth, their savings, their pensions, and do that, and again, in a seamless manner. So when you said, for example, that Affinity, yes, you can transfer money anywhere. Most fintechs, you can do that, but you're still doing it through a third-party bank. And so, and interoperability is not easy. Apple phones, we can bump phones and exchange cards. I can't do that with a Samsung. So that's still not happening. But an app like WhatsApp enables that kind of interoperability, right? So how can we have wallets that work in that same easy way across the various platforms that enable the everyday ordinary folk in our continent to grow their wealth, to grow their businesses, to manage their risk? And that's not just business risk, but even risk as they think about what next for their lives in pensions, savings, etc. And how can we do that in a manner? Trust is the big thing. It's, we know so many people who still put, even people like us, who still put their money under the mattress just in case they can't get money out of the ATM on a weekend, right? So we need to be able to trust the system, trust the rails, and know that it's going to improve lives, livelihoods, and the financial health of ordinary folk.
Thank you. And you know what's super interesting, just on the design element as well as in the user experience, when we were doing our research around mobile money and USSD, it's so clunky. You have to sit there, dial a number, I think it's like 38 buttons that you have to press to make a transfer. And then, to your point as well to Jonathan, like the experience is terrible, the design is terrible. To your point as well to Jonathan, then you don't know if the transaction's gone through. You try and make it again, and the next day you find out it went through twice, right? So why not just hand over cash, right? The other thing that was really interesting that I heard at 3i is that 66% of mobile accounts are dormant, which I didn't know. So despite a country like Ghana having over 30 million mobile money accounts, people have more than one because it was linked to loans. And so if you default on your loan, you just throw away your SIM card and move to another operator, basically. And apparently that's a huge reason as well, too, that we have such low, so making sure that it's deeper health there.
And just to add to that, we've invested in a digital ID company. Mm-hmm. And so that company...
We have a lot of investors in this room.
Yeah,
what are they called?
Seamfix.
Oh.
And essentially, they're providing national digital IDs. They're providing digital IDs for bank accounts. And I think having those unified IDs are also what's going to enable this interoperability. And we've seen their numbers, just for the investors, go through the roof.
Are they
because
Series A soon?
They're actually Series B now. So they're ready. They're ready and waiting.
Thank you. I'm going to answer the question for Sharon as well, too. I do warn you, it is a lengthy one, but I will do it anyway, since it's being recorded and she wants the video. And then we'll just take a couple of questions from the audience if anyone has any questions as well, too. So the question was, what does the next generation of financial inclusion look like? I did tell her it was quick fire. I will say the first generation of financial inclusion was, I'm going to read through it really quickly. I have my mother's voice saying I talk too quickly. Financial inclusion was about access. The next generation must be about participation, trust, and economic empowerment. For me, financial inclusion 10 years from now should be largely invisible. People should not have to think about which payment provider they use, which network they belong to, or whether a transaction can be completed. Financial services should work seamlessly in the background, allowing people to focus on their businesses, family, and economic opportunities. First, there are 5. First, I believe we need deeper interoperability. A customer should not feel constrained by being on a particular mobile money network or financial platform. This is why Ghana is currently working on agent interoperability. Payments should move seamlessly across providers, agents, and borders. This is particularly important for Africa, where cross-border payments remain expensive, fragmented, and opaque. The work being undertaken on cross-border payment solutions, license passporting, and emerging settlement models reflects the growing recognition that financial inclusion must increasingly be viewed through a regional rather than a purely domestic lens. I must say we are looking forward to the cross-border pilot with Rwanda on the use of wholesale central bank digital currencies and stablecoins to see how wholesale settlements can improve our cross-border payments and efficiencies. Second, we need strong digital identity infrastructure, your point. Identity should become a digital utility. Individuals should be able to establish a trusted digital identity early in life and use it to access financial services, government services, and economic opportunities through their lifetime. This must be accompanied by robust safeguards around privacy, security, and consumer control over personal data. Third, we need better use of data with stronger protections. The future of financial inclusion will depend on our ability to transform transactional histories and other alternative data into opportunities for responsible credit, savings, and investment. At the same time, consumers must retain confidence that their data is protected, used transparently, and only with consent. The goal is not simply data sharing, but trusted, secure, and consent-driven data ecosystems. Fourth, we must strengthen trust in digital commerce. Too many consumers still experience fraud, scams, and poor distribution resolution. If people are afraid of losing money online, they will continue to prefer cash. Future financial systems must provide faster complaint resolution, stronger fraud detection, better transaction monitoring, and clear accountability across the ecosystem. Fifth, we need products designed for the realities of people's lives. Financial inclusion must work for women, young people, persons with disabilities, rural communities, informal workers, and small businesses. This is why the inclusive fintech framework Bank of Ghana is pursuing is very important. The challenge is no longer simply reaching people, but ensuring that products are accessible, relevant, and suitably for their needs. I lied, there's a 6th one, I'm so sorry. Finally, I believe the next frontier and modernizing the underlying infrastructure itself. As regulators, we must continue to explore whether new settlement technologies, including wholesale, central bank digital currencies, tokenized deposits, and other forms of digital settlement infrastructure can help access long-standing inefficiencies in payments, settlements, and cross-border transactions. The objective is not technology for its own sake, but building a more transparent, efficient, and resilient financial system. How can we better design financial market infrastructure that embeds trust, accountability, and transparency, one that is fast and efficient and settles atomically? Ultimately, the future of financial inclusion is not about creating more financial products. It is about creating a trusted digital economy where people can move money, build financial histories, access opportunities, transact across borders, and improve their economic well-being with confidence. So, me or her? Oh my God. I feel like I need a drink after that. Okay. So that's the end of our panel. We have a few minutes that we can answer some questions. And if anyone has any questions for Natalie, Emma, Tokunbo, or Jonathan, please just put your hand up, introduce yourself, or I can introduce yourself for you, and we can take the questions from the audience. I'm going to make eye contact and call names out. No one? No questions? Thank you. Warren. Warren was a student at Oxford, by the way, and that's how I met him, through Professor Pinar Oskan, who's sitting to his right, and now works at NALA. The microphone.
Firstly, thank you to the panel. This has been super insightful. We talk about financial inclusion as an African problem, but I wonder, how granular do we think the solutions need to be? I think we all here know that there are a lot of nuances between markets within Africa. And so I wonder how we treat that as building an African ecosystem that addresses those nuances. And that question's open to the whole panel. We have got 16.
Okay. Does anyone want to answer that?
Listen, I by the very nature of going digital, should break down the barriers, and that includes geographical and the digital walls between the wallets. So in terms of going granular on the problems, they're the same, really. People need access to financial services. And oftentimes when we talk about access to financial services, people like us in this room say, oh, you know, surely it's not that difficult to get a bank account. And it's not just about, and then they think that the ordinary folk, all they want is loans. But actually, research has shown that people want to save their money in a trustworthy environment. And that research is continent-wide. So the very nature of digital for me should break down all those walls, and it's the same problem across the board. But what we must all understand is that access is not inclusion.
Thank you, Warren.
Provided you also deal with the convertibility of currencies, which is going to be a huge challenge.
Sharon mentioned it a couple of times. Any other questions? Oh, we've got one at the back, Farhang.
Amplify it, but okay.
We recorded, that's why.
Oh, I see. Okay. So I come from Jordan, where we had a lot of the issues that you're discussing, I would say a few decades ago. And one of the things that changed in Jordan was the role of government in being able to enable a lot of the things that you're discussing to happen. So all the way from the central bank to having a national ID card that everybody carried with these digital. So how do you see the role of the private sector versus the public sector in being able to facilitate the things that you're talking about, and how does that balance work in cooperation?
Should I take that? Maybe I'll harp back to our earlier years at Affinity. I remember when we started building it, I thought it was going to be super easy, right? Because you just build it, plug into the other infrastructure that exists in the ecosystem, and then launch, right? How foolish I was 10 years ago. I remember we reached out, and I don't think any member of the tech team is on here, but our head of product now, who back then was just an intern, we reached out to one of the biggest ID verifiers here in the UK that all the big tech companies use. Firstly, they didn't even respond to our email. We found an introduction through our networks. They responded and said, sorry, we don't deal with Africa compliance issues. So we thought, okay, well then how are we going to do ID verification, right? We're building a bank. We're not building a system that does selfies, like live selfies, like you do if you download and open a digital app. So then we went to another service provider. They said that for GDPR reasons, whenever they scan a piece of ID from us, which they did, that's how we kind of did ID verification, they couldn't send it back to us unless we were compliant with GDPR, and unless basically we had to get consent basically from the applicant as well too. This is one of about 100 stories of this, by the way, like this. So we told them, well, we're regulated by the central bank. By law, we have to hold like ID documents here. Here's the law in Ghana. They said, okay, our legal team will get back to you in 6 to 18 months. No, I'm not kidding. Seriously, yeah. Then we were like, okay, we'll go with a local service provider. The service didn't really work very well. We don't really have much in terms of funding in our part of the world. And after working with them for about a few months, they went under. So that was a huge amount of risk there as well too, right? So we had to build it ourselves. That's what ended up happening. And I spoke a few weeks ago at a conference, and I said, as a founder in Africa, you're not just going to work and building a product, you're actually building the road getting to the office as well too, There's so much that you have to do on top of that. And there are several examples like that, and it is very frustrating. But there is a good element behind that as well too. And I think I haven't mentioned this publicly a couple of weeks ago. By default, a positive outcome from kind of going through this long journey of building for such a long time. And I remember when an investor did due diligence on us, they were like, you're not one fintech, you're 20. I was like, yes. our cost of acquisition is so low because we don't have any service providers. So instead of doing an ID verification with a user, which costs $10, and they might drop out halfway through and do it a second or third time, it might cost $10, because we built everything ourselves, it's all free, basically. So our acquisition cost without marketing is $1.3, which means basically we can actually bank people that are technically less, that can afford banking less than the average person as well, too. So there was a positive outcome at the end of that. I don't know if there are any other examples that you want to give.
So many, but yeah.
No, I just wanted to repeat something that Natalie said, which I forgot to say in one of my interventions, was incentive is key. Incentive is key because even for the beneficiaries themselves, sometimes they don't see the point of doing it. But incentive is key, and that's something that we really worked on, but it requires resources. And that's why you were talking about public and private sector, but in the middle, you also development sector, because those development projects, that's sometimes that's the bridge. When there's something missing, that's what they bring in, because the incentive, even for policymakers, that the only incentive that I usually have is revenue. How much revenue can we get from this? But we had to teach them how the incentive is not just revenue. Like you said, it's making sure that your people have a better life. That's the key incentive, because revenue is one thing, but you're not going to get revenue from them. Even though you formalize them, they will just disappear. But if you make sure that their lives are better, they will have an incentive and you will have the incentive as well. So that's very key.
Thank you. Any other questions? Oh, William. We're running out of microphones.
So my name is William Durban, and I work for Opportunity International, but also in financial inclusion more broadly. And the question may be to you, Tariq. So how do we ensure that organizations such as yours will continue to push down market and will not migrate up market when you see that your products are more profitable?
It's a very Machiavelli question, because I had a 1 hour conversation with William about this last Friday, by the way, and I know this is not Chatham House rules. But yeah, I know.
I want it on record.
I know. I know. So, obviously we started this organization because we care deeply about financial inclusion, right? Because, that's why we're all here. But it's very, very easy to understand that banks are very profitable businesses, and there's a much easier way of making money that's not doing what Affinity does. So the phone call I had with William on Friday is to hold me accountable that we're not going to strategy drift, basically. I think it's a balance. So I think something that's super important is we just received our 3rd grant from the Cisco Foundation, who is an organization that's been supporting us for the last few years, and actually how we met as well through the foundation. I don't think we can ever use equity and investor money to subsidize anything that would come across as charitable, because it just doesn't make sense. I don't think we should even use money to spend money on marketing. I think everything that we should do when we raise money should be centered around building product, basically. And then the rest of it should be, customers kind of loving what we do and spreading the word about it. What's great about these collaborations, and hopefully a couple of other bits of good news will come out later this year, and hopefully one with you as well too, we're plotting, is that we can use donor funds to actually try and understand how to make financial inclusion commercially viable for populations that Sharon mentioned, that ordinarily we are not, that is not core to our strategy as well too. So the great news about what Cisco has helped us with is try and understand very specifically how we can help people understand digital literacy. So most of our customers download an app, open an account, but they don't know what an OTP is, right? They'll get a text message, they know what a one-time password is, because they're not digital natives. That's not the culture they grew up in. So how do you educate people around fraud, around OTP? That's not about selling a product as well too, which is obviously not core of our mission. So thankfully we have donors that have been supporting us with missions like that, and any ideas and things that we can do that way so we can stay true to our strategy is super important. Thanks for asking the question and putting on a record, especially in front of my board and investors here as well too.
I think you have to include financial literacy to that as well. I run a non-profit that provides financial literacy to school children, university children, and small businesses. And we see that that is still an untouched area. And, you know, the same reason why we think, apart from trust, people put their cash under their mattress is they don't also understand where they can put it and how they can manage that cash in better types of products.
You know, I have a story about that. We did a tour with the UN a couple of months ago. They came over to visit us, and they're organizing a trip around financial health. And we went to meet some of our customers. We were having these sort of like questions that we were asking. And they asked one of our customers, why don't you borrow basically from Affinity? They basically said, it's too expensive. And they were like, what do you mean? And then they gave the interest rate, which was in the 30% range, basically, for a digital loan, which is very, very low in Africa, as I'm sure you know. And so we said, well, this is the cheapest loan, basically, as an instant loan. And she goes, yes, but if I borrow from that person, it's 0.5%. Yeah. And we're like, that's impossible. What do you mean 0.5%? When we looked at it, it was 0.5% a day. You know, which, by the way, at an APR perspective, is over 200%, right? You know, and something as simple as that is something that kind of, you know, alluded to her because it was a like-for-like comparison as well too. I'm gonna call it. I'm gonna wrap at that as well too. I'm just gonna do a few quick thank yous to everyone here. Firstly, to Yale International Leadership Center, the gift that keeps on giving. Even though I left 2 years ago, I've never really left, right? Yeah, I'm not a fellow. I'm a current fellow, right? And fellow for life, exactly. And also to so obviously to Emma and to Yuval as well too, who have been super supportive with all this. To the Mo Ibrahim Foundation, Natalie, Rebecca, Simon, and everyone else that's here, and the incredible team that comes with you as well too. Daphne and Will are in the room. So thank you, folks. To the incredible panelists, my fellow, Tokunbo, exactly, who, by the way, I met through the Mo Ibrahim Foundation way before we both became fellows as well, just to show you how small the world is. So you are the outlier, but you will soon be a fellow. We have it on recording, right? Jonathan, so lovely to meet you, you know, a now generation member as well through the Mo Ibrahim Foundation, who support a lot of incredible leaders and the work that they do. I'd also like to thank Michael, our author, who is a student at Yale. He's Ghanaian. He's doing his MPP, joint MPP MBA at Yale. He has a wonderful internship in New York, basically, so couldn't come, but he was the person who drove basically this report, and hopefully the next two as well too. And then finally, I'd actually like, well, actually two more, sorry. I'd like to thank the team at Pentagram. I don't know if Dominic's in the room, but should be the chair of Pentagram. So it's one of the largest design agencies in the world. They're responsible for 20% of the world's brands, by the way. So there's a little booklet on Dominic's work. There's a beautiful Netflix documentary about him as well, too. But he designed the report. So we just provided him the numbers and the words, and he made it look the way it does, and obviously has done everything for Affinity as well too. And then finally, I'd like to actually thank the team at Affinity. I'm going to start off with my actual team members who are in the room. I've got AJ at the back, who's our CEO, who does all the hard work, and I take all the credit for. I've got Stephen at the back as well too, who's our CFO as well. Our anchor investor, Jan Petzel from Eldon Capital. Affinity would not be where it is without him as well too. Our incoming board chair, Doug Lacey, at the back there. Who else is in this room? And a ton of other investors are in this room. So say hello to everyone in the room as we break and you grab a drink. And in particular, I kind of want to mention three incredible storytellers because, you know, doing what we do is important, but telling people about what we do to kind of corral this coalition is important. And I've got three incredible women that are opposite me. I'm going to start from the right because we're in Ghana. So Jess from Wimbart, who has kept on for how long? Like over a decade? No, definitely not. Has been telling the stories of fintech and innovation and tech in Africa. So thank you so much for all that you do. Akosua, who's the head of tech in Ghana and does an incredible job basically promoting Ghanaian tech and did tech in Ghana in the UK last week with the head of fintech. And my fellow as well too, BB, who runs one of the biggest publishing houses in Africa and publishes stories about African narratives as well too. So thank you all for coming. Please enjoy the rest of the day. We have the room till 6. And a shout out to the Forte team and Katie as well too for making all this happen. So thank you so much. A round of applause for them because they sorted everything out. And apparently, this room only finished 2 months ago, by the way, and we're the first event to happen in here. I don't know if that's still the case. So it's nice to, like, you know, proverbially break the champagne on the side of the building. But enjoy, chat to one another. We've got incredible people in this room, and I'm going to grab a few of you guys and connect you to one another. Thank you so much.